Hello, everyone. Simon is here with AvaTrade, and I want to welcome you back to our weekly trading plan webinar. And of course, for those of you that are new, a couple of words before we start. Basically, the title speaks for itself. What we're trying to do here is actually to make a plan for the week, and how we do it. We go through some ideas as far as the big picture, what's happening in general in the markets. We'll discuss the upcoming events or announcements on economic calendar, and then we go to specific instruments on the trading platform, trying to work out some scenarios, possible levels, possible strategies. That's pretty much what it is. And again, I think I haven't said it in the past few weeks. You plan your trade and then you trade your plan. And the whole idea of a structure, like in everything else, specifically in trading, you have better chances to succeed if you have a certain plan or certain structure, certain direction, as opposed to just impulsively trading and trading on the go. Okay, so let's move on. And before we go into further information, I'd like to read this risk warning. Any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be construed or applied as investment advice, a recommendation, or suggestion. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 71% of retail investor accounts lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. And you can find the full disclosure statement at avatrade.com. And I just want to remind you that you can follow us on Twitter, of course, and on YouTube. We're constantly posting new videos, webinars, tutorials, and everything else that you can find it could be useful for you. And another thing, if you are watching it on YouTube and you don't want to miss the upcoming events and webinars or anything, you can just subscribe. That would be great. And you can just click on that bell there and you will receive notification whenever something new is being added to our YouTube channel. Okay, that's our agenda, usual agenda. It could be in a different order, but we're going through indices, stocks, commodities, and Forex. And we'll start before we go to economic calendar. I just want to start with a big picture, what's happening. And unfortunately, the negative influence of the war, it's still there. There's some improvements. There's some meetings going on, trying to negotiate and bring it to a peaceful solution. But as of now, there's still war is still going on. People are still suffering and dying, unfortunately. And besides that, the geopolitical effect of the war is affecting pretty much the whole world. As you know, the prices went up for energy, so we'll be looking through them in a moment on the terminal, and they cool down a little bit. And also, there's a lot of uncertainty, and the high prices on the energy adds more to inflation that's already super high. And some analysts are talking about it, and they say that there's a big chance of recession, and they kind of talking about a lot of negative outcomes. And there's a quote that I'd like to read. It's by Apollo Global Management Chief, and he says that downside risk to the outlook are not only Ukraine. The fundamental risk of recession comes from the negative impact of rising inflation on consumer spending decisions and corporate spending decisions, end of quote. So what does it mean? The inflation, we know inflation is super high. I think it's higher than 40 years ago or on that level. And there's a slowing in the consumer spending, and it makes sense. You know, if your food is more expensive, if your gas is more expensive, you have to spend more at the gas station putting gasoline in your car, and you spend more on feeding your family or heating up your house, you're not really that eager to run to the electronics store or to buy a new car or to buy a new television or any luxury things when you really have not enough certainty for tomorrow, where you have enough money to feed your family and so on. You know, maybe I'm bringing it a little bit too drastic, but that's the reality. You know, simple people are living day to day or week to week or month to month paychecks, and they're really struggling in today's situation. And hopefully that we'll have some kind of solution to it. Now, on that note, actually, I just wanted to remind you later when I'll be talking about Apple stock and actually to do with slowing down in consumers. I just want to make a mental note for myself. Okay, let's move on. Last Friday, as we said last week, we had the payroll, the non-farm payroll numbers, and the expectation was 490,000 jobs added, and we had 431, which is lower. And also, a lot of analysts are saying that the labor market is really suffering now, as they connected also a lot with energy prices, as company cutting off things, and inflation and interest rate increases and so on. And they said that it's going to continue to the downside. And also, if you could see, even over here on Friday, when the manufacturing PMI and the numbers, you know, we started having some really negative economic numbers. You see the China manufacturing PMI and so on. We're having a lot of stress, a lot of pressure on the markets. It looks like it. And this week, so this was the NFPs, as we know. Um, the good thing, the unemployment rate actually decreased by 0.1%, but the jobs, there's less jobs being added, and we'll be talking about in a moment how the market reacted to it. Now, what we have for this week, and just to remind you, what I do here, I'll just bring the high impact events or announcements, and also, as I always say, I encourage all of you to really prepare yourself for the week, or if you want to do it on a daily basis, really look into the areas or markets that you are trading and follow the events that are to do with those markets. Over here, I just take out the high impact thing. So we have the governor of Bank of England speaking on Monday. On Tuesday, we have interest rate decision from Australia, and we have a service PMI. Now, interest rate decision from Australia could be very interesting. As we'll be seeing in a moment, the Australian dollar has been pretty strong here. So maybe we are leading into the announcement by the Bank of Australia. Maybe we'll see some increase in interest rate. It is possible. Now we have FOMC meetings minutes, and that's something that's a result or announcement from the meeting. Usually they bring it up about 3 weeks after the meeting. So we'll be seeing more information about the Fed's policies and decisions and so on. That's on Wednesday, a series event. On Thursday, we have a trade balance again from Australia, retail sales from Europe, also important number for European markets. As we said, it's a lot of focus now, besides the inflation, which is connected to a lot of focus into spending. So if they're right with the kind of dark predictions, we should see across the board in different countries and places a decrease in retail sales. Even here, you can see the previous was 7.8%. The consensus is already low 4.2, and let's see what happens there. Now, we have also employment data from Canada. Usually it comes together with the US, but this time US reported on the 1st and Canadians a week later. So this is what we expect in the upcoming week. Okay, let's move on to the trading terminal, and I'd like to start with Apple stock. We'll start with stocks today. So if you take a look at Apple, okay, and we'll go to daily chart. We had a big move here. We spoke about it, I think, last week, a week before, when we hit 150 support. We had the move up. It was a very strong move. And then in the past 2 days, or Wednesday, Thursday, was a sell-off. Then it followed with a sell-off on Friday, but then we came back up. Now, what's with Apple? Something that's important to know, that Apple is really being affected by consumer spending, and also what I found, that JP Morgan actually removed the stock from its focus list, and that's really strange because Apple is always in the focus. But after this move, I guess whatever had to happen happened here. So they say we're not going to focus on the stock anymore, because what they say, that the consumer spending is really fading away or diminishing, and they just removed the stock from the focus. And that's JP Morgan, the big analysts. Okay, now another stock, before we go there, let's take a look at the possible scenarios. So we dropped from this level around 175. Take a look. We had kind of a triple resistance here, or triple top, you want to call it, whatever you want. I don't like this terminology. Just we hit the level 3 times, whatever you want to call it. 1, 2, 3, and then we dropped, and then we tried coming back. We established a new resistance around 168, 169, and then we dropped again lower, and then we touched the psychological level on 150. We actually went a little bit below 149.94, and then we went straight for how many sessions? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 sessions straight up. And now we moving into correction here. So what could happen here? A few things. If we are going lower here, the 168, 169 level could be a support here. And then if we break lower and start building resistance here, we can start sliding lower. Again, it depends what the market itself will be doing. As I always say, on a falling market, even the best stocks are falling, and on the running market, even not such a great stocks are running up in sympathy. So this is as far as Apple goes. Now, another stock I want to bring to your attention is Tesla. Okay, I personally like the company, you know, and as you could see, they really didn't have an easy times, and up and downs and so on. And it's similar to Apple. They really sold out here, and then we had the straight up recovery, and they just reported they really met the expectation of Wall Street, and they produced about 310,000 cars in the first quarter, which is meeting the expectation. As far as the target, the stock target price, the average target is about $948 for the stock. We are trading higher over here now. Now, just to give you the numbers, in the past 3 years, the stock made almost 1,800%. That's 1,800%, when S&Ps made 41%. And year to date, the stock is up 3%, and S&P is still down 4%, and S&P is down 5%, and Dow Jones is down 4%. So the stock is doing great. Um, uh, if that's the target, it's probably going to be trading around that. But let's take a look at technically what's happening here. As you can see, and I'm a big supporter of trading levels. Take a look. This is the level from which we dropped, and on this recent move, we stopped right there. So important to know, to do your homework, right? And to know the levels. Some traders could be panicking, whoever was short. Others probably took the advantage of this level over here from which was sold out as a possible short, and maybe they're already happy campers. I'm not saying you should be shorting this stock, but I'm just saying that depends on your style and the way you trade. Some traders, I'm sure, took advantage of that. Now, what's next? Uh, we might try, but again, if I read these targets, others read too. So if somebody reads the target is 948 or 950, and we are $130 above the target, maybe they're not going to be so eager to run and buy it. So again, if the market comes in, Tesla probably would come in with it, and we'll probably go and test our 1050, even 1000 levels, and so on. And of course, the opposite could be anything. They might announce something crazy now, and the stock can just go over it. But again, in order to go and retest the all-time highs, we would need to start seeing some price action on the closing side. So we need to see some daily closing about this 1,112, 1,120 levels to the upside. So that's on Tesla. And the last stock or the last company I want to look into, it's Walmart. I haven't talked about it for a while since all the actions with Amazon, but now it caught my attention because it's really approaching the resistance level here, 1, 2, and 3. And I tried to look what's happening here, and actually on the 30th of March, the end of March, they reported a big size trades. Somebody is getting into Walmart, and they call it whale trades, and it caught some attention by some analysts, and this is something that caught my attention. And then I looked further, and actually one of the funds, an Oppenheimer fund, they have a target of $165 for the stock, and that would be actually the all-time high. And if you take a look at the monthly chart, we're really trying to break this resistance here around 150, 151. So with that target, again, they could make it happen. And maybe, as they say, the analysts say, if you see these huge size traders, they don't know if it's institution or like a big personal trading activity happening, but it looks like, based on those analysts saying, it looks like somebody knows something. Okay, and then 2 days later, the Oppenheimer upgrades the target price to 165. It could be something happening. So just for your information, again, if we break this level here, we might see the next level is around 151.71, 152, and that's just $1 away. Okay, so just another stock on the radar. So that's it with the stocks. Let's move to indices, and I want to show you exactly what happened during the announcement of NFPs. And actually, I gave another webinar on Wednesday, a substitute for Naim, and I gave a webinar of NFPs, and I brought a quote there saying that really market will decide what to do. And I've always been saying that, I probably said it here as well a few times, that even if you know exactly the number, if somebody just texts you information, a secret information, and they said, okay, these are the numbers of NFPs, so to the point, uh, and you still wouldn't know what exactly the market will do. And that's exactly what happened. So I just want to bring it to your attention now, and we'll try to really not to spend too much time on it, but we'll try to analyze and see exactly how market reacted to the NFP numbers. And I just want to, okay, this is where it all started. I'm going to bring it here. Just give me a second. Put the vertical. Okay, this is the announcement. Okay, so this red line is the announcement. Now, as you could see, we were already the day was up and down. It's nothing much. After the sell-off, we really tried to go higher. We couldn't, and we established for the day a support around here. So this was a support for the day, the line around 45.37. Okay, that's, and then 5 minutes or 10 minutes before the announcement, we start selling. And on the announcement, when we saw the numbers lower and all other data, we really start moving lower. And then we faced a resistance here. So the support that was here became a resistance, and then we tried a few times. This is the 5-minute chart, right? We dropped initially, okay? This was the drop. Then we couldn't go higher. We dropped again. We retested it again, confirmed the 45.37, 45.38 level, and then we sold out again. Then we tried, we failed to go retest again. We start making a lower highs and lower lows. And then from here, I don't know exactly what happened. I didn't see any news happening, but they just decided that 4,500 was a good level, and they just decided to bring market higher. But take a look again, speaking of important of the levels, we came with all this, I don't know, excitement. We came straight to this level and not a penny higher. Let's say, I'm exaggerating a little bit, but we hit the level right here, and then we came back, and then we tried. We actually had a few closing about it, and then we closed the day exactly on this level. Okay, now we can switch to 1-hour chart, and you can see how this action, we had resistance, 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 broke through, then went to the skies, came back, became a support, and now it's resistance again. So what we're going to do in the upcoming week, just to give you an idea of what happened last week in indices. And let's take a look at weekly chart. We'll do that daily anyway. So S&Ps actually were flat. They were up 0.1% on the week, and that's, you can see it, pretty much flat. Then the Dow Jones was down actually 0.1%. And then you have NASDAQ was up 0.7%. So pretty much flat. The Nasdaq a little bit higher, but for Dow Jones and S&Ps, the flat. The whole week, a lot of actions, a lot of excitement both ways, and there was just 0.1% move in the whole week. Okay, so it tells us that the market is really, really kind of holding on the brakes. Nothing's happening. We're not going any higher. Okay, nobody's in the logical mind at this point. It looks like it. It's not me saying, even though I agree with that. Nobody in their logical mind are going to buy this stock, as we have a threat of recession. We have inflation piling up. We have Feds, increasing the interest rate more and more. And just to give you latest statistics, there's 100% chance, of course, we know that, there's no news, that the next decision they're going to raise, and there's a 75% chance, according to all the information surveys, that the next raise is going to be 0.5%, and then there's a 70% chance that by the end of the year, the rate of the interest will be between 2.5 and 2.7% by the end of the year. That means that really they will need to push it higher to reach that level. So with all this information, all these things that not really in the market's favor, nobody goes to buy it, right? And again, we had the recent move. It was a nice one. We had the 2 straight weeks up, and the third week, which is the last week, was a little bit slow. I'll go back to S&Ps that they show a bigger picture or a better picture here, and take a look. We are at the levels of this initial stop after this huge run post COVID run. We stopped right here. The high was 45.49, and this past week the high was 46.30. That was on Wednesday, and then Thursday, Friday we sold out, right? Or Wednesday, Thursday, Friday was a flat day. Okay, so we are facing a strong resistance, and upcoming news and upcoming decisions and so on, we might see. Again, I just want to bring it back to you. Let's analyze it together for a moment, then we'll move on to different assets. Now, we had to move straight up with few corrections here. Correction, a high. We confirmed this level, okay, and then we went higher, then went below, confirmed it again, and we are confirming it again around 45.40 level, 45.50 level, okay, and this is the high here, 45.49. Okay, so again, in the upcoming week, knowing that that level is the strong level of resistance, we might have a plan for the shorting the market actually. And to do that, first of all, you need to know what's your risk. You need to calculate your risk based on your equity, based on your strategy, based on your time frame of your trading, and so on. So, it's important. It could be a good idea or a bad idea, but it doesn't matter. You need to take it, run it against what you have on your account, and that would lead you to know what kind of position you can take and what your stop loss should be there. So again, potential to the downside on equities, and that's what we'll be watching for the upcoming week. And the same thing on Europeans. We have DAX into correction. We have a French CAC 40. And let's take a look. This is the only one that's really moving higher, but as you know, the Nifty 50 is very interesting. Sometimes it can just drop whenever it decides to. So we'll be watching it as well. Nikkei is sitting on the support after this recent move, but it was a failed run, and then we're back on this support levels here. 1, 2, 3, 4, 25,600, let's say it. This is the level. If we start closing below it, it might start dropping to the downside. That's the Nikkei. And we've been talking about Chinese index here, and it's been gaining a little bit of a momentum to the upside. And actually, we're slowly moving to currencies, and this is the reason Australian dollar has been one of the strongest currencies, because as you know, they call Australian and New Zealand dollar, they call them commodity currencies. They sell a lot to China. Of course, they sell to other parts, but China is the biggest importer of goods, materials, resources from Australia and New Zealand. So take a look. We'll be watching Chinese market. So far, we are experiencing the resistance around 14,000, and we'll be watching Australian dollar as after this move higher, it's been having a hard time. And take a look from here, from around this level, 0.7527, 0.7530. That's what the big drop started, and here a lot of consolidations happening. Again, it could mean the further move higher. Anything could happen. As you could see here on the weekly charts, a little bit more clear here, and on the monthly charts, even clearer. There is a possibility of moving higher, and we'll be watching that. But if we're staying here, we refuse to go higher, and the equity markets move down and the dollar index gets stronger, then we might see move lower on Australian dollar. New Zealand dollar, similar idea. It's a little weaker than Australian dollar. It also failed to break through this resistance level. Now let's take a look at dollar index in general, what's been doing. Okay, remember, just to remind you, we were fighting the 96 level for a while. I've been talking about it week after week. 96 was a big number. Then we moved higher. We had this attempt to 97, almost 98, and then take a look how this level became a very strong support to the penny. 1, 2 here. So now we have a nice channel that we're trading in, and it is ranging for now. So it's ranging between 97.50, let's put it that way, and 99. The high here is 99.40. So between 97.50 and 99.40. And we moved the moment we broke through this level here and we established the closing price over here, you see, we closed, and then we just, with the gaps, we moved higher. The dollar was very strong, and then we dropped as fast to the downside, but we are holding this level. So again, for people that like to trade the channel, you buy around the support here and try to get out somewhere. And then if we are moving higher, there's always a chance to the breakout. But for those of you that try to take the chances on a quick buck here, sell closer to the resistance and try to make money to the downside. But again, fundamentally, buying here is probably being on the right side. You just need to know your levels. Okay, you don't want to buy at the tops because you're gonna get caught in this move down. But buying it at the low, knowing your stops, and knowing that the Feds are continue increasing the interest rate, so the dollar pretty much is in a good position here potentially. So that's the dollar. Now let's take a look. A lot of publicity about the ruble, as all this move in the strength of the ruble, it's all artificial, as Putin signed the law that European buyers of oil and gas, they need to pay in rubles. So he tried to trick everybody. I don't know about that move, how it's going to work out. It's all connected to ruble and gold. But it was a nice retracement. We came back to the pre-war levels, and on Friday was a nice buying opportunity here as we reach actually the pre-war level. This is the 23rd of, oh, this is the 24th. This is when the war started, 24th February, and we hit the same level. The low here was 80.58, and on Thursday we hit 80.42, a little bit lower than that, and then Friday it shoot up again. So this could be a nice opportunity for buying dollar against the ruble. There's any potential. We can go to 100, we can go back to 110, 120, 130, or we can at least you know that we stopped here. So if the trader were looking to buy these levels, there's a predetermined stop over here. So at least Thursday low was the 80.42 or 80.50, and potential to the upside is definitely higher than to the downside. There's a possible scenario. Again, anything could happen. The war can end. I don't know. Maybe they'll reinvent something new, and but chances are higher of the dollar getting stronger here than the ruble getting stronger. So that's dollar ruble. USDZAR. USDZAR, I know a lot of traders are paying attention to this currency, our customers from South Africa, and it looks like this level here, it's a lot of actions. Take a look. Resistance, resistance, support, and support again. So 1445, 1440 level, it's been a buying opportunity. From here, we actually made a high, and we're back to these levels with a lot of actions here. So again, potential, if the dollar continues going higher, potential to the upside, it's very nice here. And at least your stop here is at Thursday's low, 1440, 1439. It's a nice, it could be a nice ratio to the upside. So that's ZAR. And if you take a look at dollar yen, a lot of actions we hear. We spoke about it. The Japanese central bank tried to buy some securities to keep the rate at these levels. They're very comfortable here, even though they're losing a little bit on the import side because they're paying more for the commodities they're purchasing, but they were happy with these levels and they were purchasing some bonds. And it looks like they failed in the beginning. We really retraced, but this was a nice correction from the highs. And this move was really, really strong. So let's see what happens here. We are, at least we established some kind of support here. So that's already helpful. So the support around 125 and a quarter, 125.25. As you could see here, this was a resistance. Then we moved higher and then we established the support. So it could be anything. We can drop down and retest it again, or we can continue higher, and it could be anything. We could go and confirm the highs here. As of now, we kind of in between. So anything can pretty much happen, but at least we know there's a nice support here is 125 and a quarter. So that's the Japanese yen. Now USD CAD. USD CAD, it's very interesting here. Now we'll talk about commodities in a moment, but if oil is not running any higher and dollar is getting stronger, as you know, there's a correlation between the oil and Canadian dollar, and we might see based on this, there's a support here, there's another support here. We had a nice attempt to drop lower, but they bought it back, and this 124.80, it's been holding. So potentially, if the dollar is getting stronger this upcoming week, and again, if oil is not going to the skies again, we might see a move to the upside. But in order for that to happen, the first thing we want to see is breaking out of the Friday's highs. And that's 125.38, 125.40. So it's really tight here. As you could see, the whole week we're really in a tight range. Okay, about 50, 60, 70 pips. And similar thing happened here. Take a look, similar picture. After move down, consolidation, move higher. After move down, consolidation, the same levels. So that's another reason why potentially we could see the upside, especially after seeing this failed sell-off impulse. It was a nice sell-off. We broke to this previous tails over here, but the buyers came back in. So for me, it looks very nice on a potential buy. And again, I want to see the Friday's highs taking off. So that's USD CAD. And let's take a look quickly in euro dollar. Euro dollar is a lot of very choppy trading here. We went recently to 108, then we're back to 111 and a half. So again, we have some data coming in and we'll be watching it. But as of now, 111.30, that's a resistance. We tried to break through it. We couldn't, we came straight back. And let's take a look where this move started. 109.50 looks like it over here. So we are right in the middle of the channel. So either way you want to take it, be careful. Of course, it's better to look into it at the levels. But if you go in the smaller time frames, it gives a nice opportunity for scalpers and day traders. So again, it depends on your style. You might find an opportunity here. Pound has been very, very weak. Take a look here. This is the weekly, 1 to 3 weeks down, and now we're pretty much flat. On the daily chart, we are trading below this previous support. From here, we had 1, 2, 3 higher. Then a lot of actions here, but we keep on hitting this 131.60 as a resistance. And one thing that we can try to do here is actually to have a little bit of the trend line and see if that will help us. So we bounce from here, we bounce maybe when it hits this level again, some actions will happen. But as of now, it's really not much defined directions in the pound. It's been sitting weak. Okay, that's it with the Forex world. Let's go into commodities. And oil, I mentioned oil to you. We had a crazy move with the war. We came right back. We made a lower high, and we're trying to come back to retest the support around 96, 97. We are holding it. Again, let's see what happens. A lot of political things happening, a lot of reshuffling happening. Europe is trying to find a way to disconnect or detach from Russian oil and natural gas. Big games are there. We don't really know what's happening behind the curtain. So we'll be watching what happens. At least we know that this level here, 96, kind of holding, and the previous resistance around 116. So it's about $20. We sold out. Now, very important for those of you that are trading oil, very important to know this drop on Thursday happened with President Biden actually they've been talking about even before the war, the prices were going high, but now with the war and all the issues, they actually signed the law. What they're doing now, every day they're releasing 1 million barrels of oil, and they'll be doing it for the next 180 days. So yeah, it looks like it's a lot, but some analysts say it's only 1% of the oil being used in the world, so it's not that great of a number. But oil did react to the downside, and we had the 2 days of selling. So it could be anything. We might come and retest this 95 or even between 94 and 96 level right here. That could be possible. Okay, that's oil. Natural gas, very strong. We spoke about it. If you remember, we were holding 477, then we broke through this previous resistance over here. We went straight 950, closed higher, and now we are facing a new resistance around these levels here. And we are in a nice channel between 550 and 588 now. Natural gas, it's a hot item with all the issues with Ukraine and Russia happening. So it could be that we're going to continue going higher here. If you take a look at the weekly chart, there's a way to go. And if you take a look at the monthly chart, which most of us forget to do, there's I mean, potentially we could go anywhere here if we break out of this level here. That's what, 637. We were there when there's no war or anything, and there was a high of 646. That was in October 21. So now with all the issues and build up, potentially we could go and retest this level here, and that would be a triple top from which anything could happen. So a nice upside pressure on the natural gas. Palladium. Palladium found a nice comfort zone here around 2212. 1, 2, a lot of actions here, and then we came back after all this crazy move, and then we dropped. We made a high, a lower high, a lower low, and we're kind of establishing a support at these levels here, 20 to 12. Again, Russia is, I think, if not the biggest, I believe is the biggest producer of palladium. So with all the sanctions and everything, the commodity is really a high item. So we might see in the upcoming week a nice move to the upside on palladium. Copper also, it's been strong with the war. Now it's cooling down, it's fighting a resistance around 477. Partially, the China drop in the equity market caused also a little bit of resistance here. But we might see, if we break about this and start building up, we might see continuation to the upside. But with all the economy and possible equity moves to the downside, we might see actually a continuation to the downside. But clearly, we have this range now between 437 and 477. As you could see, a lot of actions here and resistance to the upside. Gold. Gold also, as you could see, it's really building up a support here. Clearly building up support with few tails, but support is around 1915 after this crazy move again with the war. And then similar to other commodities that we just went through, made a lower high, tried to do a lower low, couldn't, the tails failed, they bought out. So we are trading between 1915 and let's take a look what this number here is, and 1966, about $50 range. Okay, so range is good for those people trying to catch quick moves, buying here, taking the profit somewhere else. You know, don't expect, if you're trading short term, don't expect that you're gonna catch the whole move, which is also possible. And again, it depends on the style of your trading and the time frame that you use. Make sure that you calculate your risk, and if you have any questions, talk to your account managers, ask them to help you with that if you need any help. So again, $50 range on the gold. Let's see what this upcoming week brings. And that's it on commodities pretty much. Let's just take a look at wheat. Wheat actually broke through this support here after these crazy moves, but at some point we'll find a support because there's a big threat of shortage of wheat and corn for that matter. So maybe this previous level here around 970 could be a buying opportunity. It's hard to say because we can, as well, we can come back to somewhere at these levels here. But let's take a look what was the level before the war started. Okay, this is the 23rd. And there is a possibility that we come here as other commodities did too. But there's also a chance that we find some kind of support in between. So again, uh, possibly looking for some buying opportunities the moment we see some kind of a support established. As of now, this was a support here, but it broke through. So we're finding another support here for possible buying opportunities, taking the wheat to the upside. And corn is really sitting here, unlike wheat. On the weekly chart, it's actually establishing a support, and it never had this crazy move as wheat did. So there's a possibility that corn might move first, as it's really holding strong, and it didn't have crazy moves like wheat. Okay, so that's as far as commodities. And take a look. Let's take a look quick look at Bitcoin. We said that 48. We really, for a moment, we broke even on the year, but we came right back. But we are succeeding in holding this 45,000. That's what I mentioned to you a few weeks, that we couldn't break through, and then the moment we broke through, actually closed higher. There was an attempt to go higher, we didn't, and we are building again, building support around 45 as the resistance stop being present here, and it looks like we're building support for the move higher on Bitcoin. Again, just summarize things before we end this meeting. We have Feds regularly now will be increasing the interest rate. The inflation is affecting everybody. The consumers are not spending, and it's getting less and less. We had jobs are being affected, less jobs being added, and we have a few announcements this week that we went through, and there's a big chance of a recession. A lot of analysts predicting it, as they said that the Feds are behind the curve, that the Feds missed their chance to act on time, and they're a little bit late to the party. With all this, it looks like there's a pressure on the equity markets, and then we might see some actions to the downside on indices and individual stocks in the upcoming week. And commodities have a chance to bounce back, as unfortunate war is still happening and it's not ending for now. So we might see the moves to the upside. I don't know if we're going to meet the highs that we had on the peaks of this war, or but at least we probably have some moves in natural gas, oil, palladium, and wheat. I want to wish everyone an amazing week. Stay healthy, stay safe, control your risk in trading, and have a wonderful week, everyone. All the best.